Should be that. Yeah, that looks right. Okay, so really, a few really interesting things that are on the move today, and there probably will be, because we've got inflation data later on from the US, and that inflation data is going to drive some of the movements. Great, thanks, Angel. Okay. So we'll have a look at a few things. Now, I am short on the FTSE currently. I've got a trade on from yesterday, which it took off in the other direction, but I still think that there's a potential for a short. So let's check the FTSE first and see if there's a trade for you guys. Let me see. There you are. No, have I got anything here with any pivots that I can put on? No, I don't think I have actually. Okay, doesn't matter. Okay, so we can use this anyway, and check out what the levels probably are on the FTSE. Sorry for facing away from you, I've got screens all over the place. So there is certainly, when we look on this, we can see that the support line is probably here. And if it crashes through, my trade is just above. My trade is just actually below where price is right now. So I'm actually slightly negative, but I'm still looking for downside. And then targets are probably going to be somewhere within yesterday's range. This is the range on yesterday here. And that would suggest that there could be some downside. You can see that there's a little trend line. I'm doing all this on the daily for right now, but when we zone down, we can see in just a little bit more detail. This is probably what we're looking at with the FTSE. Maybe even that we might have to tighten it up. There's enough touches along here to tighten that up. So there's probably not much to aim for. From here, you're okay. I mean, there's 30 or 40 pips. Now, if you were to get in here, you'd probably want stops near the high. So it's going to be a break-even scenario at this moment in time. But we will wait and see whether there is a likelihood that the FTSE is going to fall. I never worry if I get into a trade a bit early, and it might be that I'm way early, because there's actually more resistance up in the FTSE around about another 200-300 pips above where we are now, which is going to account for around about 5%. So there could be a 5% gain in the FTSE before it does genuinely start to fall. But we'll talk about some of the reasons why I think it's going to probably struggle over the course of the next few months later on. But let me just show you these other levels that I'm looking at. So I'm switching now to the monthly, and I can see that there is resistance up here. And what I'm hoping you guys are always getting from this is that all I'm trying to ever do is find where support and resistance is. Now I can overlay what I want onto the chart to try and ascertain where that is, whether it's a pivot, a weekly, monthly, or daily pivot, whether it's a moving average, whether it's just pure price points, whether it's structure, which maybe we'll have a little bit of a discussion on structure today, because I think when it comes down to price structure, it might be the thing that people struggle with the most. Because everybody can see a moving average, everybody can see a pivot, everybody can see a fib level on a chart, because it's effectively superimposed there for us. But when it comes down to price structural points, I think that might be where people get a little bit lost, and that really is how we start to determine cyclicity and the cycles in the market. And we are trying to get the cyclicity, because if we can do that, then we can know whether we are trending in a strong trend or a weak trend, or not in a trend at all. So we'll have a little bit of a look at that as we go. I'm just going to have a quick look at something on the FTSE. Yeah, there's a little bit of a signal here that there's a possible downtrend. I think my take profit on the other one is okay. Now, I'm not sure if this is going to work. I'm showing you the UK cash. I trade the futures, but I'm trying to switch what I'm showing you guys just so it might relate to you a little bit more. but I'll tell you exactly what I'm going to do and when I'm going to do, if I'm going to take a trade, because I will add to the position. I'm in one from yesterday, but I'll add to the position if it looks like it's definitely going to drop significantly. And you can see this is where we are. So this is the support level. If it breaks through the support level, which it is currently, then it might start to grab down here. Now I'm just seeing whether there's a definite signal here. Yeah, there is. There's enough of a signal. So really, I'm going to take another short, probably at the candle's high. Okay, so if it pops up, I'm going to take another short, and I'll tell you when. If it doesn't pop up, I'm okay to be in the trade already, but I quite like it. Quite like it for a short. I'd like it up here, really. If it comes anywhere near the lows here, which is 7105, it's currently at 70.98. I don't really want to get in just yet. But it does look nicely negative this morning. So let's see if we can get one more trade on here at the 7105 area. From the futures, and it's not there yet. Come on, pop up a little bit here. Pop up and give us an entry. Yeah, it looks good. Definitely looks good for the short. just really now trying to pick the right point. So it's just here. Just what we want is the price to touch that yellow line. Price comes up there, we can take the short with a bit more confidence. Here we go. Let's see if it's going to get there. What's my one there? 78. And then when we've done that, we can relax a bit when we got our trade on. And if it doesn't pop up, it doesn't pop up. You know, this is down to the appetite. I really want the right price here, and I'll talk to you about price in a little while as well. When we've lost the distraction here. Okay, we'll keep our eyes on that. It might not come back, so so be it if that's the case. So price really kind of plays a big part for me. I got into a trade yesterday with gold, and I didn't get the right price, and actually it just kind of ate me away. It ate up at me to the point that I had to close the position, which you know, it's never really that favorable for me. I prefer to hold on to positions if I can, but it just didn't behave, you know, and I still think that gold has got a decent chance of going higher. But it's just a very, very tricky animal to snare, gold. Right, come on, FTSE, give us that. Do you know what? I'm going to switch the 5 here and just see. Yeah, you see, that's definitely the area. Because at the minute, if we trade here, we're really trading at the low end of the candle. I want it at the high end of the candle, because this, and you know, when we discuss structure in a little while, then you'll understand why I'd want to wait for this rather than trying to trade down here. This is okay today, I think, because I think this is weak enough for it to not be a problem. So you could trade this, I think, with relative comfort, but it's not good practice to kind of go into that, because the problem is things that you're looking at, indications you're looking at, can switch pretty quickly. But what can't change quickly is this is the previous price point. So that's why I prefer to wait just a couple more moments here and see if it can just come up. I'm not sure if I'm going to get it. No. Not going to get it this morning. Not going to get it, I don't think. Oh, it's not going to pop, is it? Is it going to pop? Now, what we'll do is if this one does miss out, I'll keep an eye on it for later, and we'll see if this almost becomes a resistance zone instead, and we can take it there if we're not going to get this price. Let's see if we can take our eyes off it for a little while. Just checking the minute chart there. That's the high end of the minute chart, so that the structural aspect is kind of all over this. Yeah, it's not going to come back, is it? Okay. Probably too much work to do now for it to come back. As I say, I think the trade's okay to take for the downside, because the signals are really weak this morning. And you can, you know, with something like this, you can tend to be a little bit more, what I'm going to do is I'm going to adjust the other trade I'm in and see if I can get the cash out of that instead, because this is not going to trigger me. 36. I think we are headed, if this is to transpire here, I think we probably are headed down to yesterday's lows, and if you look at it, it's probably down here. So there may well be some support here, but as discussed earlier, the trend line on this, which I think if we draw it again from the daily and just put this up here, the trend line suggests that that you know, price may well get sucked in. Actually, it's coming back a little bit, so we might still get an opportunity, but we'll see. It looks like that could be the target, which is why I think it's okay. You know, it's okay to take a trade to the downside here, but you can see this could be the first target here, right along that point there. Could be a bounce point there, but there might well be a bounce point just a little bit further down on the trend line, and it definitely looks heavy enough today. Yeah, it definitely looks heavy enough today. That the market looks very, very weak this morning, and it will be a shame if we don't get a position on, an extra position on. But I don't think I'm going to be able to get you guys into this safely, because I'm trying to take into account that you're probably using stops. Okay, let's talk about some other aspects that are driving this, and we'll ignore it for a bit. Now, gold all of a sudden starts to get really interesting, in my opinion. So let's have a look at the gold chart. Gold is going to be front and center today, and you know, we've got Ainsley coming in later, but let's just do a general synopsis of what's going on with gold. And the situation here is that we've got inflation data out later on, and there's just a few signals here that suggest to me that this could well be the point to try and get into gold. We are in a box. You know, if we are analyzing this chart, and you can, I'm going to give you the you know, both scenarios here, but we're in this box here with gold. You can probably put it about there. I'm just going to change the color of the box, if I can. Let's make it white. I think it'd be easier to see. There we go. So we got this going on right now, which means that the low end of the box is down here at 1750 probably, and the high end of the box looks like it's around about 1770. So we're currently at 1760, so right in the middle of the whole range of the box. So let's take that away because it's difficult to look at. So we've got a box range going on, and the box range might be a little bit lower. It might be 1770 because of these levels here, but we're in the lower range of that box there. But when we look at this on the bigger picture, this is what we've got, and it's scruffy. It's getting really scruffy, and I'm suspecting that the reason it's getting scruffy is that it's quite important what's going on. But we've got this inverted head and shoulders kind of going on here, and as I say, it is scruffy. But it could be that this line here is actually all of that. You know, it might be that this is the left shoulder, which actually gives this one a little bit more of an equal balance. It's making it a bit more balanced, and I want to try and see as much balance between the left and right shoulder as is possible. But it does look like there could be balance there. Now, if that is the case, and this is genuinely a right shoulder here, That puts this at a trend line and a breakthrough. And the best place for the right shoulder is after it's broken a trend line. So this is a good signal here. It's a good solid signal that we've got going on. So I like that. Now, if we delve in just a little bit further to the 4 hour, what we then have within this this particular pattern, and it could be that, let's just tighten this line up a little bit and see if we can get, it looks like that could be the line. Very, very scruffy looking price action, which is why we probably need to look a bit more of an overview rather than trying to ascertain, you know, where the nice kind of clean aspects of the trend are going to be. It's very difficult to know. So the overview is that we've probably got this box, lots of tails, but we've probably got this box. So we know where the lower end of the box is, and we know where the upper end of the box is. Now, if we look at this on a 4 hour, what we've got within this pattern here is another little trend line break here. False break there, but back in again, and then another break there, and not the best hold. Now, I don't know whether the line's there or it's probably there actually. You get more touches there. So remember, the longer, the stronger. So we're after as many touches as possible. That to me looks like a genuine break. And what we also have, going back to the daily, is, no, it's going to be a long chart there, isn't it? Oh, no, that's okay. That's okay. What we have here is a low. There's the area of previous resistance there. You know, it was a support there. It became resistance there. So that makes this a high. There's a new high. There's a higher high there. So is this a higher low? And we'll get confirmation of that if it breaks through. But it's looking pretty good. You know, I quite like the look of the gold chart. I think it's looking pretty healthy. Pretty healthy for a move to the upside. Now, the caveat to that is when you go to the longer term timeframes, and this is why gold is becoming a very, very difficult thing to snare, because what we've got on the longer term timeframes is this level here, and price action just a little bit below it. Now, this could be a false break, and realistically, we won't know whether this is false or not. And this is one of those sort of situations where you say it's better to stay out of trouble and leave it do its thing. Pop up, pop back, and give us something just a bit cleaner. Because what might be what we might need to see is that as the left shoulder. This whole thing is the head. This kind of bar is the head, and then we need to get a right shoulder somewhere over here. No, don't get me wrong. It is looking really messy and very difficult to make a judgment call on. But I do think that this would be quite clean if it breaks through the level, breaks back again, and then we can see if we can go. You know, we'll have another trend line break there. So I guess with gold, it's one of those things that you say we might have to miss out on $40 here, 1760, and if it comes back again, it's going to be around about the 1800 mark. People are calling for $10,000 on gold. I mean, you know, whether that's the case or not, I don't know. And if I'm really frank about it, I don't really want to trade it. I want to buy it, and I want to hold on to it and just put it in the portfolio to protect other assets. But trading it initially actually makes quite a lot of sense, because you're not paying leverage costs and you're not paying spread costs and all that. You pay spread, but it's not anywhere near as big. So you can almost trade it, try and get a position, and then start taking the money out of the trade and buying physical if it starts going in the right direction. So I'd like to trade it and hold on to it, but it's proving to be a difficult commodity to snare. And I guess what that's basically telling us is that that these charts need to be in agreement. So fractal theory is that what happens on the monthly happens on the 1 minute chart. So if you've got an uptrend in the monthly, what you're then waiting for is an uptrend to start coming into line with all the other charts to take a trade. Now on the monthly, I think you could say, well, it's a bit rangy actually, monthly, because this is a low down here. I guess a double bottom there. We haven't had a fresh high. It's got to get through 1950 on the monthly, really, to say that we're in an uptrend. But I do think that this area is a little bit tricky to analyze in many respects, because it just looks like a huge, just looks like a kind of a broadening pattern of some sort. You know, if you were to draw the levels here, that's what it's kind of doing. This horrible broadening pattern, very, very difficult to read. So you need some clarity. But on the monthly, I think you could argue that that we are in either an uptrend or a downtrend. It looks pretty rangy. So because that's pretty rangy, we can probably ignore that. On the weekly, we can say we're in a downtrend. There's a low, there's a lower high still going there, and that's probably a lower low down there. You know, forgetting the tails, I'm much more interested in the closing prices. Lower low down there, so you could be aiming for that lower high. And even though a break of the trend line won't give you that higher high until it breaks there, it will give us the higher low. It gives us a genuine higher low. So if we can get that on gold, that's probably the safest place or the safest way for us to play it, rather than continuously being frustrated and trying to get into position. I don't know if you guys are doing the same thing, but I'm pretty frustrated with the way gold is moving, and I've made, I reckon, nothing out of this. I don't think I've made any money out of trying to trade gold so far. So that's the situation there with gold. Now, the US dollar is something we need to consider when we are buying anything, really, because everything is traded in against the dollar. So when we're looking at this gold chart, it's XAU USD. So what I'd like to do is have a look at the US dollar and see what that's kind of telling us. Now, where is the US dollar? I know it's in here somewhere. It is US dollar. Here it is, USDX. Just come up. Now, if we look at the US dollar, and again on these longer term time frames, it's got a level here. It's got this level along here. Touch there, and I'm looking at the closing prices, not the wicks. Close there. There is a wick there, but this is much more interesting to me. The close prices. It does create some genuine support and resistance. Close there, and that's where we are now. So this is at this point, while the dollar is under this line. Lee, do you know what, mate? I agree. I mean, you know, boring, frustrating. I just don't know what it is, but I am finding it a very, very frustrating trade, a very frustrating commodity to try and trade. I did the trade for. Okay, cool. Well done. BS for BS. What's BS? I did trade for BS. Okay. Can you tell me what strategy you traded that on? And we'll have a look at that. We can have a bit of a talk about strategy as well if you guys want to. And you can tell me what you're looking at, and we'll see if we can I can continue to point you in the right direction and see if you're still trading the right way for the strategies. If you guys are still trading the daily wave rider, we can have a look in a masked way of the daily wave rider. The buy stop on gold, you know, I like it. I really like it. I'm finding it very difficult to get involved in. Lee said it's boring. I'm finding it frustrating, but either way, I'm finding it difficult. If you found a way in, Agnes, then I have to say I'm quite envious, because I'd like to get into it. And this is the reason, really. The dollar looks like it's bashing its head here against resistance. Now, the other thing with this, when you look at any chart, what you want to try and find is the trend. What's the primary trend? What's the intermediate trend? And what's the minor trend? And for the primary trend, you're looking for months to years. For the intermediate, looking for weeks to months. And for the minor, you're looking for days to weeks. So the best way to find months to years is by looking at a monthly chart and drawing a trend line from left to right. You know, if it's left to right going from up above to down, you draw that. If it's from the bottom up, you draw that. Now, what we've got here is there's a primary trend line along here, and there's also a primary trend line here. Now, the interesting thing about this one, when we look at this, is that the dollar is underneath the primary trend line, and it is it's dissected this price action here. So it's underneath that. That suggests, technically speaking, hey Joe, oh, let me get in YouTube as well. That suggests, technically speaking, that that the dollar is going to weaken on the technicals over a long period of time. Gotcha, Joe. I've got you now, mate. I've got to switch between a few different tabs here. But Angel, if there's anything in the YouTube, I know you're doing it, but just give me a heads up, and I'll run over there and have a look if there's lots to see. So this suggests to me that the dollar, technically should be weaker, unless, obviously, if the dollar was to burst through this level or come through this level and then come back, then it'd be a different picture. But right now, this is on resistance. Now, we've just had the debt ceiling being raised. Now, does everybody understand the conversation about the debt ceiling? Because the debt ceiling is one of those things that that can be a bit confusing, and it's effectively the US government are just digging and digging. A guy called Mike Maloney calls it a debt floor, which it is really, because what they're doing is they're digging a pit and filling it with money, and then when they've run out of when the pit fills up, they release the trap door just so they can make the pit bigger, and they're just making it bigger and bigger and bigger. So I quite like the analysis about so the debt ceiling. So what happens with the debt ceiling? Let me see if I can let me see if I can bring this over here. Here we go. Is it that one? Yeah. All right, I'm just going to change my screen on my. That's better. Oops. Right, there we go. Now let me just make sure I can actually draw here. Yeah, that's moving that. Okay, so what the debt ceiling amounts to is now I think in 2007 the US debt was, I mean, don't quote me on this, but I'm pretty sure it was somewhere around about 7 trillion, somewhere around about that. It was somewhere at about 7 trillion. Now, what they're effectively trying to do is expand. Now, they don't have the money to expand. Now, the only way that they get money is, if you think about how the US government, how does the US government make money? And I'm going to put it out there to ask, because if I ask you a question, then it will start to spark rather than me just telling you. How do you think the US government makes money? How do they pay for, how are they supposed to pay for things? Anybody know? So they've effectively, Biden has got this plan. Has got one of his plans. Biden wants to, yeah, good stuff, Gary. Thank you, mate. So the way that they should be making money is tax. But what happens is they have a plan. So, it doesn't matter what president has a plan or what government has a plan. They have their plan, and their plan costs a certain amount of dollars. But if they're only getting, $1 for every 3 they want to spend, then what they'll do is go and borrow the money, and they can borrow it from the Fed, they can borrow it from foreign investors, they can borrow it from private investors, and that is issued in a bond. and they'll put certain dates on the bond: 30-year, 10-year, 7-year, 5-year, 2-year, 1 year, and sometimes even a few months. So they'll put it depending on how much they need to raise, and that is the debt. So they're only, or that they were, they state how much debt that they can have. Now the problem is with the debt is that it is related to GDP. So GDP is here. So the gross domestic product, how much they make, how much are they making from the goods and services that they produce. Now, if the GDP is under the debt, that means they have a deficit. If they're making more than they're borrowing, they have a surplus. Now, I don't think that they've had a surplus for since 2001 or 2002 or something. So the US government hasn't actually been in surplus for near 20 years. And all they've done is got into this situation for the last 15 years. And this is new, if you think about it. This is a relatively new trend that's happening. 15 years isn't a long time in finances in some respects. In some respects it is, and in other respects it isn't. But if you think about how long economies have existed for, then it's not. So over the last 15 to 20 years, they've effectively been in deficit. And what that effectively pushes them to do is borrow more. So they borrow more by issuing more bonds, and then those bonds are bought up by various parties. And they will have a certain amount that they'll say, right, we can't go beyond this point, because if we do, it's going to start getting to the point we can't pay it off anymore. But every single government that comes in raises the debt ceiling, so they can borrow more money, effectively filling the pit even more. And this time Biden says that he's borrowed more money so they can pay off their loans of the debt. They can pay off the debt, which sounds counterintuitive. Anybody got any idea what the current debt is? So it was around about 7 trillion, I think, between 5 and 7 trillion in 2007. Do anybody know what the current debt is? So now we're sitting in 2021. If you don't know, it's not a problem. I'll tell you. So we've gone from 7 trillion up to 28 trillion. So that's where we are now. So 4 times higher than where we were around about 15 years ago. Now, this can't obviously continue, because at some point, bond buyers won't buy bonds. And this is what we're sort of seeing in a way with the yield. What's happening with the bond yield? The bond yield is going up and up and up because bond buyers are going, well, what you're offering isn't worth it, so I'm selling the bond. And when you sell a bond, it pushes the yield up. So when we start to see these yields go up, we can kind of see there's a bit of nervousness about this, and at some point this stuff will break. Now, what that does to the dollar is difficult to know in some respects, because the dollar can be a hedge against the risk, and it can be almost a hedge against too much positivity as well. So we are seeing the dollar rise, but we just need to be aware of this. Now, one thing that can happen here is that inflation starts to kick in as well. Now, the problem with so much debt is that they are producing more and more money. Now, for the Fed to go and buy this debt, they just produce more currency. And if they produce more currency, there's more supply, which means that the value of the currency is going down. If the value of the currency goes down, then we need to see what the inflation numbers are, because the inflation numbers tell you what the price of goods are. And if the price of goods are going up and the value of money is coming down, what happens? Everybody gets poorer, effectively, because you can't buy as much with the money that you're earning. So this is the situation we currently have. We've got this situation where the inflation data is playing much more of an important part in what's going on. Now, the one thing that the Fed can do, and I know we've discussed it before, is that they can either choke some of the supply, so buy less treasury bonds. And who then goes to buy it, I don't know. Or they could raise interest rates. Now, if they raise interest rates, the value of somebody's money is worth more, so they can go and buy more goods, and that's one of the ways they can sort out the value of someone's cash to curb the inflation. But the problem with that is that that means the government's debt is also being paid back at a higher rate. So 28 trillion is now going to be paid back at, instead of 0.5%, it might be paid back at 1%. So that's added a whole layer of problems onto the US government. And people don't seem to be, I guess because people don't really understand it, and it is quite convoluted, they accept it. And when we accept this stuff, all that we're effectively doing is walking into the slaughterhouse. Because what will eventually happen to the US dollar? Who knows? I mean, it might just crash and burn. It might be gone. We might get a new monetary system, and this is when you get arguments about. This is when you get the argument about buying gold, and this is when you get the argument about buying silver. Buying cryptocurrencies. So that's why people do that. That's why people go out and they buy gold and silver. Gold and cryptos, or silver, or precious metals, effectively. So that's why the watching what's going on with gold is quite important, because I think it's probably without question that we should have it in the portfolio, which is why I want it to buy rather than just to trade. I think it's probably without question we should have it in the portfolio, given the current situation and scenario. Given that the concern that is out there. But I don't want a bad price. Nobody wants a bad price on this stuff, because if gold is to drop down to, again, we're on the monthly chart here, so we're gonna look at a primary trend. There's a primary trend there. If gold is going to drop down to here, 1614 or something like that, about 1600, I don't want to buy it at 1760. Really, I suppose that's the trader in me, because I think most people would just say, look, you know what, just DCA, just dollar cost average, and just buy it up and get some safety. And I think that's okay to say that as well. But when you read charts, it becomes difficult not to try and get the best possible price. That is our job, after all. So I think gold is necessary, and I think buying it here is wise if it can work out. And it looks okay today. It's got to break through some of these levels. So I'd like to try and get in. I'd like to try and trade it. Agnes has done really well, I think, to have a position in this. I'm presuming that if you've got triggered, was that on a daily chart, Agnes, or did you buy it on a different time frame? On a daily. So what have you done then? Oh, did you get triggered on this or something? You get triggered on this bar, maybe? Yeah. Okay. Cool. All right. So your stop is under there, which is nicely protected. Okay. Great. Okay. Now, it's not really for me to give you financial advice, Agnes, but this is worth toying with. It's worth toying with. Hey, Joe, how you doing, buddy? I think you've done really well to get in, and I think it's worth toying with. I think it's, if I was in gold, if I'd managed to get a price in gold, and I was comfortable with effectively not making any money out of it, but not losing anything, then I would toy with trying to let the price go as far as possible, getting it to break even, and then putting it on the back burner and ignoring it, because there is a chance that gold is the only place to be. If and when everything collapses. And it's possible, I'm not saying it will, but it's possible it could happen with a $28 trillion debt and potential interest rates needing to go up because of inflation. It's possible that you have to go to gold, because gold is supposedly the inflation hedge, or one of them. And if we compare it with Bitcoin, the one thing that I would say about gold over Bitcoin is history. We know gold has been a solid performer, and it's always been the gauge of what you should do in overinflated times. People just go to gold, or when things get concerning, they go to gold. I think that the jury's still out on whether Bitcoin is digital gold or not. I still think that it's probably got more of a speculative, when things are confident. I think it's got that kind of edge to it than it does a true value, a store of value. But I might be wrong on that. I just don't know. I think the jury's out. I'm not saying it does or it doesn't. I think the jury's out. But I think with gold, you can. I think with gold, you can effectively assume that it will continue to perform as it has done in the past. So I like gold personally. So I would toy anyway with seeing if you can. That's what I would do. If I'd got a position on this, I would see if I could get some breaks. And what I'd like to see is I'd like to see it up here. And if it touched that line, I'd move my stop to break even, and then I'd ignore it and hope for the best. Now, of course, you might lose because it might come all the way down, take you out, and then go. And if you're not comfortable with that, don't do it, of course. Oh, you like trading gold? Okay, you're good on gold, are you? Maybe it's a female thing, because obviously Ainsley's very good on gold. You like trading gold? Do you know what? If you become an expert on this, Agnes, then I will yield to your expertise rather than mine, because I find it one of the most difficult things to kind of get involved in gold. I don't know why. I've just got a real block on it, and I think some of it is that I don't have quite the same confidence that I do with something like the FTSE. I think I've been trading the FTSE for so long that I'm really comfortable with it, so I tend to stick with it. But I just feel like I need some gold. Now, if you are starting to, the fact that you've said that I love to trade gold, says to me that you've found your market. And I can say with experience that if you find your market, I would go back to it, back to the well, and back to the well, and back to the well. Great. Well, that's great. I mean, if that's what you've seen, and you're right, actually, it is a much more stable asset class than something like the FTSE or equities. So yeah, I think you bang on the money with that. But if you found it, as I say, if you found your calling, if you like, then I would stick to it like glue, because I trade the FTSE because I really like it. I really get it. I really get what moves it and stuff. And it's much better to be an expert in one thing than try and trade lots of different things. So what you might then start to find is that you go and research the fundamentals. You might become really good at why gold moves the way it moves. Not just what moves, not just the price action, but what's behind it as well. And I think what we might do is have a look at some of the fundamentals on that. Now, I'm just going to bring us back to the FTSE because there might be a trade on for us. But I really like that. I really like that. I wish I was with you. I really do. My price yesterday was actually just below where we are now, but I got a little bit trampled on and I got fed up with it, so I cancelled the position in the end. Right, let's go back to the FTSE momentarily because it's coming back to our price point here. Yeah, it's still a little ways off, but it's getting there. This 15 is trying to make a grab for these areas here. And you can see where it is. That looks to me like the price point. 7106. Okay, let's see if we can get up there. It's got around about 7 pips to go. And I still like the downside. I'm not quite as confident with it, but I still like it. So I'm going to take the trade. Now, if you guys are taking this trade, you are probably going to be needing stops on this. 46 up. That's too big. Probably here. I think I'd want to aim for more than the trend line there. Yeah, you could do that. That would be a 1-to-1. If it comes into this area at 71.06. You can put the stops at the highs somewhere along the highs here. You might be able to put it at the top of the bar, but that's a really nice safe zone there. And then you're basically going for a 1-to-1. So there might be an even money trade here with the FTSE if it can just pop up just a little bit more. What about US core CPI? Yes, exactly. That's the point, Paul. That's why we are seeing, and it's interesting that you mentioned that, because that's what's the today we are getting price action which is driving that. Now what we're seeing here is that the market obviously is concerned about that. That's why gold is being bought here. So what might happen for you, Agnes, rather than taking your profit, if you can leave the position on and put it at break even, you may get a real pump today. Because the CPI inflation data is so key to the price of gold. This is the sort of thing that moves gold, and we can see what the anticipation is already. Look, the expectation is already. Look what's happening to gold there, moving to the upside. If we go back now to the dollar, look what's happening to that, moving to the downside. And as I say, I think the dollar's at a really interesting point because that is significant resistance that could really drive gold up to some breakout points. And I've just got to now just calm down and just wait for it to break through that 1800 level, and then I'll probably get on board later. But yeah, let's have a look at the data. Let's have a look at the data points now. I need this and this. And this. There we go. Right. So yeah. So this is what Gary's talking about, and this is going to be quite significant. CPI month over month and core CPI. So what you're looking for, Agnes, is this time. It's currently 20 to 9 in the UK. So we are looking at around about 4 and a bit hours away. You're going to get this particular data point released to the market, and this is likely to drive your gold position. And at this point, we kind of we start thinking about what to do with how to manage the trade. Do you want to just kind of like leave it be? Does it become? I mean, because the thing is, sometimes these things can become quite benign, and other times they can become quite important. So you can just leave it alone. Be aware of it. I think is the main thing. Now you might not be over leveraged, and if you're not over leveraged, it's much better to ignore it and let it do its thing. But it could be really significant. Now the forecast is for 0.3. And the previous was for 0.3 as well. So they are looking for a bit higher inflation. And if that number, I would suggest, if we outstrip this number, 0.4, 0.5, 0.6, gold is likely, I would have thought, to move to the upside. Likely. Difficult because sometimes it might lead the Fed to an expectation of an early hike, which may push the dollar higher and gold the other way. It's difficult to know. And we don't always know how the market is going to read the number one way or the other. But what we do know is that it's a significant number. So we know that we know the time of day. And what we can also do at this point is see what happens to the number. Is it higher? Is it lower? Do they beat or do they equal expectation? Core CPI, really important as well. Now look at core CPI. That's forecast to go up, and we're seeing gold move up. So it's kind of giving us the hint that if this is higher, gold is probably going to go higher. It's giving us that little hint. But as I say, it's always difficult to know exactly what's going to happen because the devil's in the detail, and they might read something else in it. What core CPI data will tell people, will tell traders, is the breakdown of what goods and services are driving that number. and there's sometimes, you know, one of those goods and services. It's not just an overall view that they're looking at. They're looking at what goods and services do they need to protect their money. And the way to protect money is, as I say, you know, would be going to gold or possibly a crypto. So it's going to be key. Now let's have a look at the chart on this so far. So what we've seen is back in May, it was up at 9, very, very high. In July, it was also at 9. It's been dropping back a little bit ever since then. So this is released every month. July right the way through. August was a pretty good number. So now if we now switch back to the chart and make sure that I have this one. Now if we switch back to the chart of this, dropping down since August. A little high up there with gold. And this is September. So we had a bit of a run right up until September, but look what's been happening. It's just been dropping away. And maybe that was a result of that CPI data dropping away as well. So it does suggest that we're probably looking for a hike in CPI for this to really take off. Now, if we compare this to the dollar, so this is when this has started to reduce. That's when the dollar really started to pick up. So you see the correlation. You know, the dollar just doesn't just move a bit. It moved. It started a really significant trend there to the upside. And when it started that significant trend to the upside, all assets that were against the dollar started to move in the opposite direction. And the question is here. And now let's talk about structure. The question is here: do we have enough to say let's hop into things, you know, all things that aren't dollar? And if you look at this, when I'm talking about structure, all I'm talking about is the support level here and the resistance level here. And all I would do is to say this is where structure exists. I'm just going to change the color of this because this will enable us to see the different structural levels. That was the next point of structure. And there's the next one. And then finally, we get this one. Oops. Let's just draw it. And there's our next one there. So this may well end up moving higher, but what we've got here is a possibility that this structure's been broken. It's only one bar, so it's difficult to know. It's a possibility that the structure's been broken. We won't really know until the end of the day. So if this comes back inside here, what we'll have is a point in here. This whole area here is kind of is still bullish structure because we haven't broken the base end of the structure. Now that's what I'm always thinking about. I'm always thinking about the two most obvious points for a trade. Is the bottom down here and the top here. Now, when this breaks through, it doesn't come back and test it. So obvious point for a trade, but we don't get it. There's the bottom, there's the top. When this breaks through, it doesn't come back and test it. So obvious point, but we have, so really it's been difficult to get involved in the dollar so far. There might have been other things here. There might be some pivots here, which would have suggested that that area would hold and it's not coming back. But overall, that's the cleanest way to trade price action. You're looking for the top end of the structure and the lower end of the structure, and then seeing if there is price action and a signal that enables you to get in at these particular points. Now, if you were to look at this on any chart, it makes it really simple. There's low structure there, there's higher structure there. So when it breaks through and comes back to this point, there's a trade. Doesn't get going yet. There's new upper structure because there's new resistance there. Doesn't get going yet, then it gets going. Now there's a trade to the upside there, but it breaks back into structure. And the lower end of this one is here. And it breaks that one down. And then look what happens there. It struggles, but eventually it breaks back through again. So then as soon as this bounces away, that becomes low structure and that becomes upper structure. Breaks out inside. Now you're aiming for this lower line again here. And then we get a new level here. And this one's really still in existence. We break through. And I'd want to see that. It doesn't happen, but it comes down a little bit, breaks through. And this is the definition, really, of a cycle. This is a mess because it's kind of rangy, because all the structural points are being compromised, constantly compromised. But we don't have that here. This is the definition of a cycle, because the lower structural points and the upper structural points were not compromised. It didn't come back inside and make things difficult. Now, if we go back to the gold chart, it kind of says to us that if we are going to work on that same philosophy on this daily, then we're looking at structure here. Oops, sorry, that was a bad line. There and there. Price breaks through this lower end of the structure while it's in an uptrend, comes back, tests it, and goes. Then there's lower structure here. Now I know what you mean with this, Agnes, because this does look pretty clean, doesn't it? It comes down, comes back, tests what was the lower end of structure before, which should be the upper end of our structure now, and comes down and breaks. Now there's more structure there. It breaks down, it comes back, and it's gone again. Now what's happened is the structure has been broken to the upside. And this is why this is starting to look like it's going in that direction. You know, on the dailies, it looks like it's going in that direction to the upside. So it looks pretty good. Oh no, let me just see if there's a trade here on the FTSE. Okay. I'm just going to bring in the FTSE again. It's about 5 away. Not too far off. I'm going to take this trade in the FTSE to the downside now. Not yet. I want to see it there. I still want to see it here. All right, let's see if we get it this time, okay? Now, only take this trade if you're comfortable and you feel like, you know, the analysis is sound. It's never wise to follow somebody in because then, you know, you've kind of got the situation where you wish you hadn't. I'll probably take it at 5s. I'm probably sort of okay to take it at 5s. So one more pop. I'm after one more pop up. If it can get there. Yeah, still like it. I still like it for downside here. All right, now it might well be time frame correlated, so I might have to wait until the end of the 5 minutes is up and see if we can get a nice finish on the 5. So, you know, sell on the 5. So we're currently at 10.54, and I need 10.55. And really what I'll look for is to see if we can get one more pump up and then just sell off into the top of the hour. Now I'm going to hold on to it regardless of anything. I'm going to hold on to the trade if I can get it. Come on up. Give me a pop. There we go. Let's see if we can get in here. Now, if we don't get in, we don't get in. Not the worst thing. Now, the thing is, price at this point. Yeah, I mean it's not essential. That's not the best bar. That's not the best bar because that might actually drive us down lower without actually pumping up. What might well happen is if this does pump up here, is you see the hourly bar. This hourly bar may actually provide a buy signal, which is absolutely fine, and it might even come back up into this area and then start going down. But I was hoping that wouldn't happen. What I really like is a pump up here before the top of the hour, and then just a bit of a collapse as the hour ends. So within the next 5 minutes, it may well happen here. Now I did see Ainsley come in the room. How you doing, eh? You're right. You got no powers, have you? There you go.
Hello.
There you go. How you doing?
Oh, good. Sorry, I was been for a run.
Oh, no worries, no worries. Well, we're not too far away from closing up, but we'll see if we get this FTSE trade. We're just talking about gold and the inflation. You got any thoughts today on that, and whether you think it might be an idea?
Look, the fact that gold has lost its hi Lewis. In fact, gold's lost its pulse.
Oh, 1 second.
It's just been ridiculous. We've just gone sideways for a couple of weeks now, so it's just waiting. I mean, you know, the US government is still saying that it's transitory. There's other people who are disagreeing that inflation isn't transitory. I don't know. It's just we haven't got enough oomph. We've just gone sideways. You've turned into Casper the Ghost, Ash. He's muted and gone away. So he's still waiting for that to pop up. But I guess I could have a little, let me just share this screen. Although I have a feeling he's looking at that. I'll just really quickly, no, screen, that one. I'll share. I'm just sharing a screen there, Dal.
Sorry, I'm gonna have to go, guys. My daughter just fell over outside the front of our house.
Oh, is that what happened?
I think there's a bit of a pit down there, so she's a bit upset.
Molly,
so I'm gonna...
sorry, honey. Hi, sweetheart. Are you feeling okay? Did you take a little tumble?
She took a bit of a tumble. So
yeah.
I'm really sorry. I'm gonna need to go. I don't know if it's gonna stop the live stream, but if it's not, then yeah, maybe talk through the guys with gold, and I'll see you guys in the morning. Sorry.
I'll catch you later. But there's not much to talk on oil or gold at the moment. Oil's been asked. The US government have actually asked OPEC to do something about. Let's just have a quick flick of the oil. As you can see here on the 4-hourly chart, about here, they've asked. It went up to 82, hit 82. This is WTI, but what has happened is the US government has actually asked OPEC to increase supply because they'd actually put a stranglehold on supply, which has put a pressure on the price of oil. That's where we've seen it go hit 82. Brent has actually hit over 84. It's been hovering at $84. But where we're seeing this in the 4-hourly chart for oil to be going sideways, there has been a little bit of a tete-a-tete with the US government and OPEC to increase supply. They're holding off at the moment, and things have started to slow and go sideways. So just be really careful going into oil. At the moment, we've got it sideways, and until this debacle has worked its way out, I think we're just going to consolidate for a little bit more. As for gold, as I was saying just before Ash and Molly hit the deck, we had that's payrolls, then we came straight back down again, and we're back into this huge box here. and gone nowhere fast. I know we've got a little bit of a pop up, but that would have to be the most exciting thing we've seen in the last 24, 48 hours. Again, not much of a pulse. As you can see, we're still under the monthly pivot on gold and still holding firm on the level of support at that 1750. Until I get something back up closer towards that 1780 up into the 1800 area, I am not interested. So at the moment, both oil and gold are a bit of a wait and see. So on that note, happy trading, everybody. I hope little Molly is okay, and I will look forward to seeing everybody next week. And Angel, I will hand it over to you, and I'll let you end everything. So great to see everybody. I'm sure it was short and sweet, but have a good week trading. That's me over. Thanks, Angel. I'll leave you to close up shop.